Welcome to Swing Trading and Coffee. My name is Anthony, and today I'm going to break down for you exactly what happened in the stock market. I know it's pretty messy, guys, but I'm going to give you my personal trading plan going into next week. And at the end of the video, I'm going to give you my top tips for every swing trader out there. It's going to make a huge difference in how you trade. But before I go on, I have to let you know, this content is not financial advice, and I am not a financial advisor. This is only for educational purposes on swing trading. Let's take a quick look at what happened in the news. I want to give you a quick summary about what happened, just so we know what's at play. So, according to this summary I pulled up on Grok, China has escalated restrictions on the US, mainly for exports on rare earth minerals and permanent magnets. These are very key for defense, electronics, and renewable energy. We also need them for chips. So the companies that got hit the hardest today were the tech stocks. And also, this was done in retaliation to the president talking about imposing tariffs. All right, so that's the gist of it. But there's one small part that will explain to you why we had such a dramatic move today. It's not that the news was that bad. We've been talking this big tariff mess for a long time, and the market has gotten desensitized to it. So what's going on here? We had this colossal red candle, and we had this support here. As you can see, we have these two wicks, and this is like your support zone and your buy zone. We ripped all the way down here to this dotted blue line. So we're like blasting right through, and then the next support level is at 644. Now, I'm not going to say I had a great day on the market. It was not that great, but there were some things I was warning people about, and I'm going to tell you what I did today, how I handled the big drop. In my past couple of videos, I said, market's really bullish, but we are getting really high up here in the channel. And actually, there's different ways to draw this channel. This is a bit more relaxed channel, longer term. If you bring it into where the channel got narrower, you'll see we had just a little bit here. So once you get above the middle of the channel, you start to be cautious because the market can have a pullback to the bottom of the channel. Now, I had opened up a hedge about 2 days ago, somewhere around here, because I was like, we're getting toppy, and we rejected off it the next day. This is the triple Qs. This is the NASDAQ ETF. I was telling everybody that we had this wedge forming, and this wedge, ascending wedge, was inside the long-term channel, right? And that we were getting really high up at the end of the channel. And this wedge, if it breaks to the downside, we will likely come down to the bottom of the channel. I said this in my last video. I did not expect it to go this wild in the next 24 hours. Now, what happened here is that we had a ton of greed, and people were saying, blow off top on the market, let's ride it. And that's when I bought the hedge. I bought it up here. Now, what happened is halfway through the day, like around here, I was like actually in the green because the hedge covered all the losses from my other positions. Some of them stopped out, no problem. It's part of the game. You know your entry and your exit. And when you need to hedge, you do it. But I closed out my hedge because I'm like, we're already at major support right here as a point of control. And I actually, after we broke through it a little bit more towards the end of the day, I'm like, we have another minor support here, but this is likely just getting really overextended. An assumption on my part, you shouldn't make assumptions, but it was bouncing off the level. It was reacting to it. So I decided I'm going to get a small call on the triple Qs for 2 weeks out. And of course, this being a very risky play, I had to make sure that I use a very small position size. And then on Monday, if the market does bounce, as I still think it will, then I can add into it. So I made some money on this drop, but then afterwards, in the last 2 hours of the market, things just flushed, and then they flushed some more in the after hours. So I didn't think it would be this big of a flush out, but it does seem overextended. This was a big leverage flush. People up here were saying blow off top. The market's going to keep going up. It's going to be a 1990s market explosion, melt up. Apparently, that's not happening. All it takes is one little news article about some disagreement in the political scene, and things just go down. This was all just leverage. It's not that the news was catastrophic. It's going to get figured out. They're going to come across a deal. So is this going to bounce into next week? We're going to find out if I'm right or if I'm wrong. As for the positions I had that did not stop out, I held on to them. Now they might be, but a lot of them are options, so you can't close them out in the after hours. Now, this can actually set us up, as rough as this was, this can set us up for new fresh longs. And that's what I was hunting for today. I want to bring your attention to the 50 EMA down here and this wick right there, right? Let me just circle that so you can see it. This here, and then we have this zone here. Kind of in the same area. I would expect some buyers to start showing up before we get to down here, if we even make it down there. But think of it this way. Are institutions really going to pass up this buying opportunity? I mean, 2025 and 2024 were the 2 years of V-shaped recoveries. How many have we had? This game is being played over and over, and it's just retail giving their money to Wall Street. You just got to understand what's happening. Now, if you went into today without a trading plan, I'm sure you got shocked. Like psychologically, you don't know what to do. Do I buy some to go long? Do I close everything out and take my losses? Is it just going to bounce back into the end of day? And it can drive you crazy. So before you get into a trade, you got to know where you're right and where you're wrong. And that's why when I break down all the stocks that I pick for my trading, I always put down the entry, the stop, and where my targets are based on fib levels. The first one that really stood out to me, and this one I actually loaded up on yesterday, and it's a decent position size, is Oracle. And for a couple of reasons, this stock is doing pretty well, in my opinion. We had this big flag pull and then the flag pattern, and then it was just about to break out today. It wanted to break out so bad. We were moving on high vol. It was a good volume day for Oracle. And as soon as the news came out, it just pulled back. But compare this to other stocks on the market today, the big tech giants. This is nothing. Oracle held up today so well. It showed me how much buying pressure is coming in to soak this all up. Also, we held the EMAs perfectly. Wouldn't even dip below it. In yesterday's video, I mentioned that my two of my top picks going into Friday were Oracle and Broadcom. Broadcom not doing as well. I mean, it did try to do the breakout. And the theme of yesterday's video was all about these two stocks, how they are forming a bull flag pattern and they are getting ready for the breakout. It tried to break out. The news came out, bang, down to the 50 EMA. So in comparison, Oracle is actually held way better than AVGO. This one I had to stop out of. I took my loss and I moved on. It could bounce off here off support, but I'm not going to risk losing the whole position. And this brings me to my next point, is risk management. You always need to have a plan that is suitable for your portfolio. That means how much money you have in that portfolio, how much you're willing to risk percentage-wise, and do you have a plan that you can bounce back if you get caught in something like this? And this is not the first time, and it's not the last time it's going to happen. It is part of trading. So you either have to be prepared for it and understand the psychology, or it's just best not to trade at all. It's better for your physical and mental health and for your pockets. So this one, I had my stop pretty tight here under the EMAs. It took me out, no problem. Moving on. This was the one that really disappointed me today, CRWV, because I have a sizable position in CRWV still. I had exited here, but then once we went up, filled the gap, and then came back up, I'm like, this is getting ready for its next leg up. It just needs to break. this purple line, which extends all the way back into May, and it was breaking out. And if you break a trend line like this, you take the fib levels, and this takes you up to 180 as your main target, and an extended target would be up to 205. So this, for me, had really good risk-reward ratio. It is holding. It hasn't broken the trend. It pulled back, but it has not broken the trend. So I am still in CoreWeave. I did not stop out of this one. Okay, and this one is MP Materials Corp. This one I bought. It was a split-second decision I made on the spot when I bought the triple Q put. Also, this company showed up on my newsfeed about it being a company that specializes in rare earth minerals, and the price was reacting. And from a technical perspective, this is already like a decent uptrend long. You bounced off the 21 EMA. The chart looks solid. We had a retrace back to the support line, and we went back up. So I figured, regardless of the news, this one is a good chart, and I took a position in it. It did pull back. We didn't see follow through, but it may happen next week. So small position on this, and if it works out, I add in. I don't go all in on anything. No large position sizes. Always scale in and scale out. And you add into things when they're in your favor. You do not add into them when the trade is going against you and you're going to stop out. I see a lot of people teach dollar cost averaging strategies. It works great for investing. Let's say, you buy a couple shares of Apple every couple months or whatever your favorite stock is, and over time you'll be doing okay. But when you're in a trade, if it goes against you and you keep dollar cost averaging in and it continues, you know that the trend has gone against you, you've broken whatever levels that were standing in the way, and you're just adding into it. That is not a good strategy. So just be mindful of that. A lot of beginners tend to do that. Nike, this one, I opened up a short position on this just before the end of yesterday's trading session, Thursday. I didn't make too much off of it, but it helped also soften the blow. I saw that this one, yesterday it closed right here below, right at the support level. So, and it didn't even bounce, it just closed near the bottom. And we had this big gap right here. So I figured this is looking like a decent short from up here at the yellow line. So this was already in play for me from yesterday. This also helped soften the blow of today's rip to the downside. I got out of it a bit early, to be honest. It still had more room to run, but I started speculating that this whole thing is just overblown and it's going to snap back. But that's not the right thing to do. You got to stick to the charts and put the narratives aside. AMD, this one, actually, I want to say I got lucky on, but there was reasoning to why I got out at the top here. It's very hard to nail a top in trading, but if you're anywhere near close to the top, that's great. Now, I had broken this trade down in multiple videos, so I'm going to give you only the quick recap. We had this pull here and flag forming. We had a small breakout out of the channel, and then it exploded on good news for AMD, the deal they have with OpenAI. And I plotted down the fib levels, and I said my target is the 618. This is where I got all out somewhere around this candle, and then when we had the pullback and it held, I went in for round 2 on AMD. And this one worked fine for me. I think I made about 100%. I'm going to pull up how I scaled in and scaled out of this. So the luck part is I didn't know that the news would do this the next day, but I just figured I didn't want to be greedy. I already made 2 trades on AMD that worked out, and I should just take it and leave. So a quick look at the AMD trades from bottom to top, and I'm doing this to give you a realistic expectation of trading. Not every trade works out. Sometimes even the best A+ rated trades will fail. And you have to keep that in mind. You can't go into a good trade, quote unquote, good trade and go in heavy. You have to spread out the bets to minimize risk. This is, again, another risk management strategy you need to be aware of. Me personally, and it depends on your experience level and account size, when the market is good, I'll have 10 swing trades, maybe even 15 open. Sounds like a lot, but I do it with options and I spread out the bets, and it works out because sometimes the one I think has the hottest chance at making money is the one that fails, and the one I least expect it goes straight through the roof. AMD from bottom to top, and you have here on the second, I bought 5 shares at $7.75, sold them at $44.60. This was the biggest trade I had, I think, this year. Pretty big move. I tried to get in for around 2. I bought 3 options contracts at $4.50, sold at $1.50. That was my stop. It just pulled against me, but it's okay. You take the small loss and you move on. Afterwards, I got back in when I saw momentum to the upside. That big green candle you're looking at, 480. I bought 10 contracts, sold some at 10, some at 10.28, and as it started to pull back to 860, I took off the remaining shares. So for this one, roughly 100% on it. Pretty good, minus the small loss that I had. TTD, the trade desk. So this one had a double bottom here, and I really liked this trade because it not only held up support, we have a crazy amount of gaps on the upside that need to be filled. And it's been trending in this sideways small channel here. Let me show you. And it's just started curling up the EMAs, and it bounced off of it. And I was like, this is just yesterday. I didn't get into it today. I got in it either yesterday or the day before. And you have this squeeze happening between the EMAs. So at the top, you got the 13 EMA, and then below you got the 21 and the 50. And what can happen sometimes is when you start to go through a period where it's not moving much and it's squeezing between the EMAs, once it breaks above, you usually get a nice strong move. Pair that with the big gap that we have up top, and we have the upward pointing EMAs. This to me is a high probability trade. And what happened today that proved to me that this is probably a good trade still is that we didn't react much to the news. You might say, well, the trade desk doesn't have anything to do with rare earth minerals, and you would be right. However, the whole market pulled back today. This, nothing. And just wait till I get into crypto. It is ugly. I saw Bitcoin down like 11% earlier today. Not sure how much it went down. MicroStrategy, I had 2 positions. Well, I split my calls on MicroStrategy. Some of them were shorter term, some of them were longer term, and I'm pretty sure they got smoked. But it's just part of trading. We may have found support here. So what I noticed was at the end of the day, close to the end of the day, we were wicking above this line. We were actually holding this support line, and I said, okay, we got to bounce off of it. And then the leverage unwind continued. In the after hours, we still haven't broken this level. I would not be surprised if we get a snapback to the upside. I will likely try to minimize risk on this one. And probably I'm done with MicroStrategy at this point. It is what it is. Find a better stock to trade. Amazon, this one was setting up nicely. Here is my nice happy green arrow that I put up there yesterday. It didn't make it. It broke right through. So we are now at the next level of support. We have a little bit more to go here, but I don't see this news making us go much lower. If you guys think I'm wrong, let me know why. Do you think that this move is overblown and it was just a leverage unwind that happened really quickly? Or is there something else more worrisome going on in this market? PayPal, this one is probably the most disappointing of all the trades I had because I was up in the green 50% on my calls up here, and we had a pullback day, and I'm like, that's fine. It's holding the trend line. We we have bigger targets to fill to the upside, and my targets on it, I don't know, probably change at this point unless we see a snapback above there. I stopped out of this one automatically. I had a hard stop on this one because I did not want to let a winning trade turn into a losing trade. That is the worst feeling ever. So this one automatically stopped me out. Tesla, I still have my position in Tesla, and I think for me, this one is worth holding on to just for one more day into Monday to see what happens. We do have this gap down here, and when you have a move to the upside and you have a pullback to the 21 EMA, if you get a reaction off of it, even if it pierces through the 21 EMA, you could play a bounce back off of it. But there's no confirmation. This is way too early. We'll see what happens. The way I see it is the market had this leverage unwind and panic, and it happened on a Friday, and people and the market will have time to digest this over the weekend. Things will calm down. People will start calling out the taco trade again. Poet, this one is a interesting tech company. This was actually an idea long couple days back, and I got out of it really early. I wanted to move money into other positions. It had a pullback today, pretty nice to the support level. And this is one of the really trending stocks. So I figured I'm going to open a long on this. I did that end of day. Not read much, maybe in the after hours a little bit, but I think this one may get continuation. There is a possibility of a pullback to the 21 here for a test of this area. And let me put a line here so you can see. We have this previous support level. It's okay for it to come down and test it and bounce back up, which is why I got in with a starter position. If it starts going my way and we see continuation, my target is still 1047. And I think I had a higher target around 12. I may have removed that. Some people asked me in chat to analyze some stocks for them. And I'm going to analyze them anyway, even if they don't pose a setup. I just, for the learning experience. So, and before we leave, we are going to work on a trading plan. Target. This one, had a breakdown of the point of control. It went through support. It came down. It bounced off of the 21 EMA. And even if you disregard this candle, which happened today, when you bounce off the 21 EMA in a downtrend and you're below it, this is a short, not a long. So I don't know what the person that requested this, what they're thinking of buying into it. I look at it only from the perspective of a swing trade, couple days to couple weeks, maybe even months. But we are kind of like at near the previous support zone. And let's take a quick look back if we've had anything right here. So we've actually blown past this support zone, and it may be just like what we did in the Qs and the SPY, just blew past it and it's going to snap up and we'll see it move back up. That's very speculative on my part, but this is just the way I see market psychology. It whips people out and then it snaps back up, and it's just an exchange of money between Wall Street and retail. DraftKings, DKNG. This one doesn't look so bad, but I would not be ready to jump in. So let me put down an area here for you of support. This area here is the accumulation zone. Tagged it the first time here, it got bought up. Second time here, it got bought up. Third time got bought up. Fourth time got bought up. Actually, this one, I kind of like it. Trying to find bottoms in stocks is a lot harder to play than just playing continuation patterns. You'll see that a big part of my trades are just continuations. They're much more reliable, and when you have a resistance levels that it breaks through, it just pops right through it. If I were to get into this, me personally, not giving you advice, I would maybe start a small position here on Monday. I'll think of it because this is not bad, but I need to see some kind of base forming for a couple days, and ideally, you'd want to see, so it forms the base, right? And then you have your EMAs begin to start curling up like that. And then when you get your first candle here, that's when you go long. you don't want to go against the trend. The trend is down. You don't want to catch that falling knife. You might get lucky, you may not, but I would rather wait for the right entry. You see these EMAs curling up. We form this base at the bottom and then play it for a long. That's just how I would do it. Next up, Webull. Oh boy, this one not looking so hot. This one was actually very trending like a week or two ago. People were hoping for a breakout. It did not happen. We came through the point of control and now it's just collapsed. This tells me that we're actually now at the last area of support down here. Would I take a trade off this? Not sure. Probably not. Just like I said in the last example, you want to see these EMAs here start to curl up after the share price forms a base or comes above it. You can take, the way I do it is I do an entry, small entry position, second candle for confirmation. I go full size position. That's how I do it. Some people like to dollar cost average using shares rather than options. That also can be done here. It all depends on your strategy, your risk tolerance. Next up, let's take a look at crypto total market cap. Wow, insane move. Look at that wick. We're practically coming back up to the channel. Earlier today, like an hour after the market closed, I looked at crypto and I was like, should I add some to my long-term holdings? This is possibly a buying opportunity and I missed a big part of it. This was an extreme move to the downside. And look how quickly it bounced. Now, Bitcoin, regardless if you like crypto or not, it is valuable as a data point when you are analyzing the market because it is more risk on than the biggest tech stocks out there. Usually when the markets have recessions, downturns, the biggest, riskiest stocks go down first, usually tech. And in this case, crypto now is like probably one of my number one indicators for something starting to roll over in the markets. And, we were seeing that earlier in the week. It failed to get above. And when money's not going into risky assets like crypto, and yes, crypto is risky, that investor sentiment is starting to wane a little bit. And they're like, maybe we should take a little bit off the table just to be safe. Let's look at Bitcoin, just as ugly. Man, I was like, I don't short crypto. Something about shorting crypto terrifies me. It's because the snapbacks are so intense. I prefer not to. But this, if I had the guts to get in here, it would have paid off, but too risky for my personal taste. And yeah, I have a small confession to make. I totally forgot to bring this up. I did buy some IBIT calls around the close. Another risky move, but I figured, based on the IBIT chart here, we are at a support level and we did wick above it. As you can see, this happened. IBIT you can only see here, this candle is the market close, not like the actual underlying asset, which trades 24 hours a day. It was wicking up at the end of the day. It was holding support. I got some calls, not a big position, but I said to myself, this is a starter. If it continues up, and I bought them for 3 months out to give it a little bit of time, and I was just targeting with options the previous peak right here. Is it unreasonable to think that we can bounce back up in 1 to 2 months? I don't think it's unreasonable. So I got the IBIT calls. We're going to find out if I'm right or if I'm wrong. Ethereum, oh boy, what a red candle. We came down here, we tested this previous support and we bounced off of it. That to me is great. I actually may consider getting a little bit of Ethereum, but we will see. I need to think about this over the weekend. Too many trading decisions today. All right, guys, so this is actually the most important part of the video. We're past the technical analysis now, but I want to give you some very important tips when it comes to swing trading. And these are the golden rules. So this is really going to help you in the long term if you just think about it and be mindful of it. It can make a big difference. So here's the mindset that protects your account, okay? First off, you don't have a signal for the long that fits a rule-based system that you have. It doesn't have to be my system, it can be any system. You don't have a signal, you don't take a trade. Boredom is not a setup. Chasing a dopamine hit is not a setup either, okay? We don't chase. If it runs without us, that's fine. There will always be another pullback. There will always be another day to trade. First off, you have to plan first and then execute second. So you got to know what your entry is, your stop, your targets, and the size you want to get in, which is suitable for your trading account. If it's a higher risk setup, use a smaller position, and you don't want to go all in on anything. Now, the next one is follow the plan or don't trade at all, okay? You change your rules mid-trade, that equals emotional trading. And I'll be honest with you, even after many years practicing swing trading, I still make some of these mistakes. So it's just something that you have to work on consistently. Now, this one I started using a lot more recently is rather than just have a list of stocks that I want to trade, I put alerts on the chart. If you use TradingView, you just click on the plus symbol on the chart and you can set an alert for that price target. When it hits the price, it's going to give you an alert and you can make a decision if this entry is still good or not. That way you don't have to stay glued to the charts all day. You just wait and let it come to you. I do this on lots of stocks every day and my alerts list keeps growing. Now I have more options to choose from. One other one people don't like to do, but I actually found it helpful because it helped me review how I have traded over the past year. So make a journal in an Excel sheet. I do mine in Google Spreadsheets. I have an icon on my desktop. I have it on my phone. I just can click into it anytime and add in how much I made or lost on the trade, my entry, my exit, and just review it end of month and end of year. It'll tell you where you really messed up if you had a bad year. In many instances, traders will pick the right stock. They'll get in at the right time, but they won't manage the trade correctly and it will turn against them, or they'll be over leveraged. A lot of these mistakes can lead to just one very bad trading day that can wreck your account for the next year, and it'll be really hard to get it back up. I'm not here to sugarcoat anything and tell you how awesome and glorious trading is. It is tough. It is a blood sport, and you have to get good at it. You have to be calm at it. You have to be calculated. It's the way it is. Once it gets emotional, it turns against you. And if you make a poor trading decision and it rewards you, what happens after that is that you've reinforced a bad behavior. And then that will lead to more unnecessary risk-taking down the road, which will get you burned even more because you have that dopamine loop in your head that's telling you, you did this last time, it worked out for you, give it another shot. Don't do it. And also, you need 2 green lights for any trade. First, you need the trend, and you need the confirmation. You need both for a high quality setup. So make sure to work with confluence. If you feel FOMO, step back. And guys, this is just the beginning of mini educational material on swing trading. I'm gonna make it more formal and have a series of swing trading videos for you guys. But I first need to know if this is worth my time. If you guys like this video, we're barely over a month old. If you like it, hit the subscribe button. Let me know that I should continue doing this. If I'm making an impact and helping people, that's great for me. Talk to you soon, guys. Oh, and by the way, I'm going to put out an interesting video on Tesla over the weekend. Look out for that one. Be sure to subscribe. Peace.